Hi there, everyone, and welcome into our part 2 of Timing the Market. Today, I'm joined by Sam Green, one of our derivatives advisors on the trading desk here.
Hi there, Tim. Thanks for having me, and hello to everyone online. It's good to be here.
And so Sam's an equity analyst as well as a derivatives advisor. So he specializes in equities, but also has a huge amount of knowledge around strategies and options and mini warrants that we're going to be talking about today. Now, for you guys that did come along last week we talked about, I had Caro here, we talked about technical analysis, we talked about the importance of timing the market, and we went through some of the base principles of our system that we use here to trade short term. Today, what we're going to do is take those principles of technical analysis, show that to you, but then complete the rest of the process by choosing some strategies, going through various strategies and talking a bit more about derivatives. So I'll just give it a few more minutes, guys, before we get into the core of it. I still see some people logging on. Just a little bit of housekeeping as well while we're at it. You can see the Q&A box there in front of you. Do not hesitate to ask questions, guys. Okay, even if you think it's a stupid question, I bet somebody else in the crowd will want to ask that question anyway. So just please ask it. Everyone's going to get a lot more out of this session if you ask some questions along the way. And we'll try and answer them as we go along, or we might address them towards the end.
Yeah, absolutely.
Just keep in mind, we'll be talking about a lot of different derivative strategies and things today. Most of the strategies that we'll be talking about will be leverage strategies. So I strongly suggest you don't just go out there and start trading these, okay, whether you have experience or not. It's impossible for us to go through every part of our system on these types of webcasts. There's a lot more to it than what we just show on these webcasts. So it's really, really important that you do have a structured approach when trading a leveraged product. That's a big warning we put out there for everybody. Derivatives are high risk, and how we manage that risk is by having a good, solid system that's been proven over time.
Absolutely, absolutely. A lot of people come to us having come unstuck, doing their own thing, and usually it's because they don't have a rules-based, methodical approach.
Yep.
And yeah, no surprise there that they come unstuck. Yeah.
All right, so let's get stuck into it. Now, don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. All right, so foundations of success. We covered this off a little bit last week with the picking direction side of it, okay? Today, what we aim to do is cover off the rest of this process, and that's talking about strategy and risk management. It's as we were just saying, it is so important to have a disciplined approach to the market, whether it's a written guideline, where it's strict rules. You've got to have some kind of system that keeps you consistent to the market and agile enough to move as the market changes. So as we know, there's periods of time where the market likes to trend up, there's periods of time where it trends down, and there's also that sideways sort of periods that we see as well. And there's different strategies for all of those different types of market conditions. Therefore, your system, as our system is, has to be nimble enough to be able to change with the market. So there's certain strategies we use in a nice, beautiful bullish market, but there's also different strategies we would use and adopt in a sideways market.
Absolutely, absolutely. And I think it's easy to look at trading and assume that it's all about picking the right stock, but there's so much more to it. Picking the strategy and picking your entry and exit points are at least as important. And that's what we try and stress to people.
Yep. And I guess, when you put your trading cap on, it's even more important. As an investor, yes, it's a little bit more forgiving sometimes. If you're behind a fundamentally good stock, you can just sit and wait for the recovery. With most derivative strategies, you have a time frame that you have to adhere to. So there's usually an expiry or a stop that's going to get you out of that trade. So you don't always have that luxury of waiting years and years. The goal is to be in and out quickly. So.
Yep.
And then on the risk management side, guys, that what we're talking about there is analyzing the potential loss of the trade, the potential profit of the trade, buddy management, making sure you're not deploying your full trading bank on one trade, that sort of thing. So there's obviously picking the right strategy for the right market, but there's also that risk management side of things, that if things do go wrong, and things do go wrong, guys, none of us traders get every single trade correct. That's impossible. And a lot of new traders come into it thinking it's all about getting every single trade right. When it's not. It actually, making money out of trading comes more down to how well you manage the risk and how quickly you get out of a losing trade.
Yep, absolutely. Making more from your wins than you lose from your losses. That's what it's all about.
Yeah, that's it. So if a lot of good traders have a win-loss ratio of 60 to 70%, believe it or not, right? If anyone says they have 100% win rate, they've probably done one or two trades and left.
Yeah, absolutely. Or they're lying.
Yeah.
You if their performance history looks like Bernie Madoff's returns, then something's wrong.
Yeah, that's it. So, look, we're realists here, guys. We're not going to paint this perfect picture of trading. Trading is a difficult pursuit. It's a risky pursuit, and you're going to have a lot more sort of success in trading if you have formulated or you learn somebody's rules and system to trade.
Yeah, absolutely. It requires a consistent, systemized approach. It requires discipline. It requires knowledge. That's the reality of it. Yeah.
And that's what we're about here at Trader Circle. It's about supporting traders, whether you're new, whether you're experienced. We've got a lot of experience on our desk, and a lot of our advisors have different levels of experience ready and waiting just to support anyone. So whether you've had years and years of experience and you just want to hone in your skills a bit and learn a bit more, then our courses are a good thing to have a look at. But also, if you're an absolute beginner, I strongly suggest doing a course, whether it be with us or somebody else, to learn the core foundations of trading.
Yep, absolutely.
All right, so let's get stuck into it. I'm going to go straight across the market now, and we're just going to talk quickly. Always like to start off at the XJO, guys. Okay, this is the starting point. When I start my day, I start here. In education, I start here. The reason why we always start here on the index, and XJO is the top 200 stocks of our market. Yep. The reason why we start here is we get a feel for the overall mood of the market. Okay, whether it's bullish, bearish, or sideways is kind of what we're looking for. Is what's the trend, what's the sentiment, and then we can sort of go down into a sector and stock level. So as I showed you last week, what we like to do is go out, 2 to 3 years. We want to work out where the current trend started. And you can see here on the XJO, that uptrend through here, that was the COVID recovery. That's now ended. Okay, so it's not really relevant to me anymore. So I start zooming into what is relevant. So we went from an uptrend into a sideways trend across the top here. I'll just make these lines a bit thicker and darker so you can see them. So you can see that was the bottom of the channel through this period here. And, the top of the channel, which is the all-time high, roughly up here as well. So we channeled, had our first break of that channel through here, and look to start creating a new channel boundary, but then that also broke and has put us into more of a downtrend. So if you remember from last week, trend is defined by peaks and troughs. So peak, trough, lower peak, lower trough, lower peak. And now we're looking for the next bit of evidence, aren't we? Right. So if I draw in downtrend line, something along these lines here, that probably best represents the current downtrend. And that's what we're really focused on. So in the short term, what's happened? We fell out of bed. That was the Queen's birthday long weekend, reopened after a long weekend and just hammered lower, right? I'm not going to go too much into the reasoning for that, because we'll be here all day. But then the market from there has been sort of tracking sideways to higher. A little bit of a short-term uptrend was starting to form, but now that's also broken down. So I'm not overly keen on drawing that uptrend line anymore because that's now broken. I'm just going to remove that.
Absolutely. Now you may be asking, well, it was trending higher there for a short-term period, but in an overall downtrend. Well, just because the medium to longer-term trend is down doesn't mean you can't have a short-term counter trend.
Correct.
And indeed, it's very, very, very common, very frequent. If you look back in May, we had something similar, and similarly, it had that big, strong breakout in early June to the downside.
Right, so we call that a counter trend move,
Mhm.
which is kind of what we've been in recently.
I think we may have a question.
Yes. Yes. Camera has dropped out. Oh, okay. Let's see whether I can refresh that. Oh, looks like the camera itself's turned off. So give us 1 second, everyone. Let's see whether that. Oh, there we go. Looks like I might be coming back on. There we go. Sorry about that, guys. Okay. They're coming back into it. So basically, that's your counter trend level. And so we were on a bit of a counter trend move recently, but now it looks like it's failing. So what I'd be more focused on is, has this broken down? Is this going to continue the downtrend? But at this stage, I can't even call that because it keeps holding levels of support. So there's a few key levels at 6,600. And we've cleared through one of those levels, but held the next level today. And you can already see on the bar we're rebounding, and we're just stuck at around this 66. So you can see for over a week now we're just consolidating. Okay. And this could easily keep going sideways for a month, guys. We've seen this on the index before. We've seen 6 months worth of sideways movement on the index before.
What I will say is our market in general has a tendency to track sideways for long periods. And we can see here there's a reluctance from our own market to break in one direction or another. Today it may have tried and it failed. It's come straight back up. Similarly, it tried to break higher in early July or very late June, and it failed to do that. So it shows you a bit of indecision. And when there's indecision in the market, it heads in a sideways direction.
Correct. Absolutely. And common after a big move up or a big move down as well, right? So when you find yourself a distance away from the overall trend line, it can either jump quickly to that trend line and then fall again, or it can go and grind sideways until it finds trend again. And that's very common for our market. We saw that in the COVID recovery, in fact, especially through this period where it jumped considerably off trend, and it went sideways, found the averages again, found trend again, and leaped again. So that was almost 6 months of sideways movement through that period. So it's like Sam said, it's very, very common for our market to do that. So why are we talking about this, guys? Right? So there's a reason why we're talking so much about the sideways. One, that's what we're sort of seeing on our market right now. So how do you trade it? Okay. Now there's the thing with what I'm about to show you is very unique to options.
Yes.
Okay. Now options is a derivative, exchange traded options, or ETOs. Okay, is the other bit of terminology you're going to get heard out there. Now options are very unique to the industry in that there's no other real product that comes near it, right, for trading.
In terms of flexibility, in terms of being able to construct certain types of strategies, you've got more flexibility with options than just about anything else, really. Than anything else.
So most other derivatives like futures, CFDs, even mini warrants, which we also use in here, you can only trade bullish or bearish, right, or long and short. So terminology, long is to go bullish, so you think the share price is going to rise. Short, you're going bearish, you think the share price is going to fall.
And those futures, those mini warrants, they're great for a trending movement. They're great for a directional movement. Like you said, we use the mini warrants ourselves. Fantastic directional tool.
Absolutely. So some of the benefits of derivatives, guys, like one, most derivatives are all leveraged, okay, which means that you don't have to put as much money on the trade to make a profit. So an example of that would be, if you put 100 grand on BHP moves 10%, you're going to make 10 grand, right? If you use an option and you get a 10% movement, you can make 100% return. Right. So that's the definition of leverage. So to make that 10 grand profit, I only need to use $5,000, right? That rather than using $100,000 to make that 10 grand profit. on that movement. But where comes you get leverage, it also comes a higher risk because you can lose 100% of your money rather than just losing 10 grand if the share price falls 10% against you. So with leverage comes responsibility.
Yep.
And
I'm gonna say that as a result, you need to be very, very rigid with your approach. If you come at it lackadaisically, or without a structured rule set, without a structured approach, without risk management, you will come unstuck. I've heard so many stories of it happening, and I've not heard a story of it working out for a longer term period. Whereas approaching it with a rules-based approach, you can have that success.
Absolutely. So now all the warnings are out of the way, guys. Let's get into it and talk strategy, right? So we have to warn you guys. I don't want to teach you this on a one-off webcast and then you go out and just try to apply it without having a set of rules. All right. So what I'm going to show you is a strategy called a short iron condor. Don't be fooled by the names. The names of option strategies can get quite strange and quite weird, so don't get too hung up on that. Now, with options, we're not obviously going into a lot of detail here on how options work. There is a lot of videos on our YouTube page that will explain this. You can come along and do our free course as well, which explains the basics of options. So, we've got a lot of content already on this. There's no point in repeating it on here. Now, don't get too hung up by what's here. This is how we build the strategy. It involves 4 different options legs to build this trade. Okay. So don't get too hung up on this. All you've really got to focus on is our payoff diagram down here. And I'm just going to zoom into that a touch so you can see it a bit easier. So essentially, what we've got is share price movement on the left-hand side here, and we've got a time frame along the top. Okay, so options have something called time decay. We can either use that in our favor or depending on the strategy, it might work against us. Okay, now in this case, we're using it in our favor. All right, so I'm going to set this into a shorter time frame. So each one of these across the top is representing 3 days of time. Okay, current share price is 65.82. Okay, so what's this showing us? It's showing day 1, we're not making anything. Day 2, 3 days later, we're making $200. 6 days later, we're making $460. Okay, and so on and so forth until it caps out at just under $1,000. So what I'm demonstrating here is we're actually making a profit from time decaying. Okay, now the goal of this strategy is to keep it between a certain band on the market. Now, if I go back to the chart, what do we think that current band's likely to be? You've got a lot of support levels down at 64. We've got two levels before, of support that we'll have to get through before it gets below 64. And then on the upside, you've got a level just in below 68 and the downtrend coming in around about 68.50. So if you've used sideways, what you want to do is protect yourself as much as possible by using technical levels.
Absolutely.
All right. So in this case, what we've done is we've used the technical levels of 64, and we've placed the bottom band of this trade below 64 at 63.50. And then on the upside, we're using the 2 levels of 68 and 68.50, and we've put our bear call in just above that.
Yep.
Okay.
So do you want to show them those levels on the chart, Tim?
Correct. Across. All right. So 63.50 is down here, which is below all the levels we've traded recently. And 68.50 is up here. Oh, sorry, 68.75. Yeah. Which is above that trend line.
Yep. And so the way this is structured is as long as at the end of the trade, the market is between those 2 levels, above that lower level at 63.50 and below this higher level here, 68.75, you'll make maximum profit on the trade. And that's what that payoff matrix is showing.
Yep. So the maximum profit is $990. And you can see that band coming into play. Okay. Now, all strategies have a risk that we've got to manage, don't they? Right. And then this is where the risk management side of it comes in. And you can come onto this matrix and go, okay, what if? Okay. What if it starts breaching those levels? What does that look like? Okay. So I'm just going to adjust the share price movement so we can see a better picture of this. Eventually, let's get up to 40-point movements. I need more than that again. 50. Okay, so no, I want a little bit more than that again. Sorry, guys. That's what I was after. Okay, so as it starts approaching and getting through 68.50, if we were using 68.50 as a stop, we need to look a little bit beyond that because obviously it's going to go through. Now, if it goes through 68.50 as a stop and it gets up to 68.84 by the time we close, we're going to lose $1,000 on this trade. Okay. And then on the downside, we're using 64 as a stop. If it sneaks through there, once again, we're losing just over $1,000. So the risk and the reward is actually not too bad, is it? Right?
Yep. As long as we're pretty tight with our rules, tight with closing out, and we keep to our methodology.
Yep. Now, I'll just show you if a big movement happens or if you're undisciplined on your rules, closing out, if it leaps through those levels, the loss is capped at $4,000. Okay, $4,020. Now, with options, you can do unlimited strict risk strategies. We do not allow our clients that trade through us to do those strategies. Okay, every strategy we teach and allow our clients to do is limited risk. Okay, so on this particular strategy, it's limited at 4,000.
Absolutely, and you could view that as the risk of the strategy.
Yep.
And so if we're making about $1,000, we're looking to make around 25% profit over the course of the next 2 weeks.
Yep. Yep. So, and yeah, I forgot to talk about that point. This is a 28th of July trade. So we're aiming to hold it to the 28th of July. So look, and this highlights to me the difference between gambling and trading. Okay. Gambling means you're either going to make 980 or you're going to lose $4,000, right? With trading, you're in full control. You can close the trade anytime you choose. And if you've got strict stops, it means that we're controlling the time we get out. If you don't obey your stops and you don't obey your rules, then you're turning it into gambling, right? And that's the difference between gambling using derivatives and actually trading.
Yep, absolutely.
Right.
We don't suggest you going out and copying this strategy now, but when we do place this strategy, we know what we need to happen. We know what we need not to happen. We know where we're going to close it. We know where we're going to take profit. So it really, comes back to being methodical, applying our rules, applying our processes.
Yeah.
I think we've got a few questions, Tim.
Awesome. No, it was all about the camera.
Okay. Oh, it's up again.
Yeah, the camera keeps turning off for some reason, guys. Sorry, having a bit of technical difficulties with our camera today for some reason. It just doesn't want to stay on. I'm guessing maybe the power cord's not quite in properly, and yeah, it's not charging. We're back on for the second, but I'm sure it's going to drop back out again. So. See whether. One second. So the I can come out for the charger on it, so I've just pushed that back in. Hopefully that fixes that. All right, so look, that's the short iron condor strategy, guys. That is a sideways strategy. As I was saying before, you can't build this strategy using any other product other than exchange traded options. But these option strategies aren't just unique to our market. The US market, these types of strategies are very, very popular. And if you're Googling out there about options, more times than not, you're going to find yourself at a US options website. More so than an Australian one because it's a bit more of a smaller market here in Australia.
Absolutely. 10 times the population. There's a lot more retail presence in the trading markets. And, if you are out there consuming content for the US options market, you do have to be aware that things are a little bit different with how each of the market works. But yeah, these strategies fantastic over there as well as here.
Yeah, absolutely. All right, so let's move away from the index now. We were looking at Bank of Queensland earlier, BOQ, for a potential bearish trade. So let's just first walk through the reasons for that, and I'll just clear off all my lines. Okay. And as I said before, we like to go out sort of 2-3 years, just see where the trend is and what's going on, and where the key levels are. And obviously, it topped out through here. Okay, just below the $10 mark. You had you crashed through COVID. You had a recovery after COVID through here. Okay. So strong uptrend through there. That uptrend has since failed.
Yep.
We're now downtrending.
Sorry, just before we go further, if you don't mind zooming out a little bit,
Sure.
just take a look at this resistance level that you've drawn in there at 970. It really shows you, markets don't necessarily repeat themselves, but they do rhyme. It's no coincidence that in that 2021 peak, it went back to the exact same level that it peaked at in that 2019 move. And that level was the bottom of the moves in 2016, 2017, and 2018. So I just thought I'd highlight that for the people online. Markets don't always repeat, but there are definite similarities to current price action and previous price action. And those sort of anomalies, that's what we're looking to often to benefit from.
Correct. Absolutely. That's a really good point, Sam. That's very well put and really explains the benefits of technical analysis and why you should learn it, for sure. All right. So, as Sam said, we've come off a very key level of the market there, and we're now downtrending. Okay. So, through that trend, you've had various movements. You had an acceleration through here, a counter trend movement back up. And it's a little bit messy, isn't it, guys? Like, for me, I always want to try and hit at least 3 touch points. So that line really doesn't work too well for me. I went to a downtrend, a sideways trend, and then another downtrend again. Okay. So really, I'll probably start it from here as a downtrend line. Okay. And you can see that that's coming into that downtrend line now. And then obviously, it's for the last few weeks, it's had a counter trend movement and it's reached that line. Now, one or two things could happen here at this reflection point, and we call this pattern a pennant pattern, by the way. Various patterns that we see on technical analysis have different names and different uses. Now, with this pattern, we look for a breakout. Okay, it's like it goes sideways into the edge, and when it breaks, it usually breaks with a bit of force. Okay, and also what we always have to be aware of is potential false breakouts too.
Absolutely.
Okay. So what we're looking for today is we've seen a bit of a break through that uptrend line, but we've got to question whether we want to trade this today or not. The break itself is not enough for me just to jump in blindlessly. I start trying to look for more evidence to ensure that it's not just a false breakout, that in fact it's likely to continue lower. Now, one of the things we look at is obviously our bar analysis, okay? And what we want to see is the current share price, which is on the right-hand side there, be close to the bottom of the day, okay? Or lower the bar, which is the lowest price someone's traded for this stock. So at the moment, we're seeing a slight rebound, which is not what we want to see. But earlier, it was right down the bottom, and it was looking like a really good signal.
Yep. And hopefully I'm allowed to say this as well, but another thing, especially when we're trading breakouts and things like that, another thing that we do is we wait till later in the session.
Correct.
Because what matters most for technical analysis is how the bar looks at the end of the day. If you'll notice, a lot of these bars, the closing movement has ended up, well above the low or well below the high. And if we're getting in on a breakout, by getting in towards the end of the day, we're making sure that's less likely.
Correct. And you can see it here, right? So you had a bounce that closed very close to the high of the day, and you had a bit of a continuation on. Okay. The market at that point of time, or this stock at that point of time, was oversold. So when you see an oversold condition in one of these signals off a key level of support, you tend more times than not to get a follow on. So the same thing here, but in the opposite view. If we can get a strong bearish signal, the stock's overbought. Okay, via our indicator, it's saying it's overbought. That's the stochastics we went through last week. Vaguely, we haven't gone into it in detail, but it's showing oversold. And now we just want that signal. And it's not quite showing it yet. it was earlier. It's reversing. So we by the end of the day might not be able to do this trade. Nonetheless, so let's use this as an example to show some strategies.
Yep.
And talk through a few different derivatives we can use trading Bank of Queensland. All right, so let's assume we think it's going to fall. The first thing I want to ascertain is where's it likely to fall to. So the targets are going to be support levels. So you got one support level here because that's a trough, okay? And then your next level of support is down here, which is another trough. I'm just going to zoom out. See, for me to get any other levels, I've got to go out way too far. So I'm not overly keen on going out that far to look for levels. So I'll just stick to the levels that are close in time here. So if this is going to keep falling off, I want to be able to take profit at around 663. And then where am I proven wrong? Okay. Because at some point I'm going to be proven right or wrong. If I'm proven wrong, I want to get out. If I'm proven right, I want to get out and take profit.
Okay? Absolutely.
So proven wrong for me is a breakthrough, one, that downtrend line, but probably two, this resistance level. So, around 707.
Yep.
So keep those levels in the back of our mind, 707 and 663. All right. So the first thing I'm going to start with is a mini warrant. Okay. So this is another calculator for mini warrants. The one I showed you before was our calculator for options. Now I'll just refresh this because it's been sitting for too long. Time's out after a little bit, so let's refresh that. Okay, so BOQ. Okay, so there's various different mini warrants we can choose. Warrants are very similar to CFDs. Okay. A lot of similarities, but they are listed on the exchange. So you're actually trading them straight on your HIN.
Yep.
Okay. They're a HIN-based product. You don't have that custodial risk that you have with CFDs and the rest. And they're similar in nature. The good thing is you can't lose more than what you put in.
Yep. And I think the borrowing costs tend to be the cost of doing the strategy tends to be a fair bit less as well.
Right. So you can pick different gearing levels. So the higher the gearing levels, the more leveraged you are. They have inbuilt stop levels as well on there. So we've got to take note of those. So current share price is 687. That's going to give me my prices. So what I'm more interested in at this point, obviously we're going to go short. So we want to use the mini shorts down here. Okay, as I said before, short is if you think the share price is going down. Long, you think the share price is going up. Okay. All right. So our stop trigger level would be 703. Now, remember how I said I wanted to use 707, was it?
707.
707. That means I'm going to be stopped out before it hits my stop. So I can't use this mini, right? What I want to do is find a stop that's above my level. So that way I don't get prematurely stopped out of the trade before I want to. So in this case, I'm going to have to use the next one down, which has a stop at about 747. Okay. So we're going to be looking at the code BOQKOR. Okay. So it's just like a stock code, guys. Okay. This is a derivative code. You use it just as you would in any platform. But this is a derivative code. So it's usually 4 characters for a derivative in the Australian market anyway. So we'll be paying about $1.93 to get into this trade. Now this is where we can sort of choose how much we want to risk on the trade, okay? And I'm just going to go up to a 4 gram risk because we're going to use this type of risk across all the different strategies I'm going to show you on this one stock. Okay. So we're going to put a 4 gram risk. This is where we can work out how many of these minis we're buying. So if I was going to place this trade, I'd be putting that into my depth screen, hitting the buy button, putting my price in. That is the quantity. I'd be paying 4 gram for the trade, and that'll also be the maximum I could lose on the trade. Now, understand there's a built-in stop loss.
Yep.
So losing that amount is going to be highly unlikely because you're going to get stopped out before that happens.
Okay. So even if we don't use our own stop loss, the inbuilt stop loss on the mini will mean that we'll lose less than the $4,000 if that mini stop is hit.
Correct. And your the stop is if the share price goes to 747 or above. Oh, so once again, you've got to pay off here. And you can see that on the way up, I'm losing money. On the way down, I'm gaining money. Okay. If it drops 10%, I'm going to make $1,400. If it rises 10%, I'm going to lose $1,400. I'll be through my stop at that point as well. Okay. All right. So what were those levels we're talking about before? It was about 663. So if it falls down to around there, I'm making about $500. Okay. If it gets up through my stop, I'm going to lose about $500.
Yep.
And then you can see there's a funding cost in there. That's almost like time decay in the option.
Yep. Now, each column here is 7 days. So, the cost of holding for 7 days is about $9 for the $4,000 risk here. And if any of you online have ever traded CFDs, you've probably ended up paying a lot more than that.
Yeah, absolutely. Absolutely. Now, understand something here, guys. It's costing us money to hold this trade. I showed you a short iron condor before that made money by holding the trade. Now, the key differences, guys, is the short iron condor has a very capped profitability. It was a 4 gram risk trade, and we could only make $990. Where with this strategy, you're paying to be in the trade, but if you get big movement, okay, if this falls 30%, the profitability is not capped. Okay, whereas that short iron condor, you're very much capped. What you can make is much smaller, but I guess you don't need any price action, do you? You just need sideways. You don't have to pick what's going to happen in the short term. For 2 weeks, it just needs to stay between a support and resistance. Where this, you have to get a movement.
Yeah, correct. Yeah.
All right, and you have to get that movement correct. So that's the difference between that sort of risk reward, right?
Yep.
And managing risk and managing expectations.
Absolutely. And we talked at the start, one of the great things about all derivatives is it gives us that flexibility. If you're simply buying and selling shares and you're in those frequent 6-month periods where the market doesn't move particularly large amounts, it's unlikely that you're going to be able to make much money. Instead, with more flexibility, with the use of options, we can still do very successful trades during those periods.
Yeah. Don't worry about it. Yeah, it's just going to keep going off, I think. Sorry about that, guys. You can't see our beautiful faces. The camera just keeps going off. So apologize for that. We'll just keep going through the strategies. So, all right. So that's a mini warrant. That's in particular a mini short on Bank of Queensland. But there's other things we can do. Okay. So coming back to options. All right. I'm going to show you a straight put. Okay. Now, this is the equivalent of doing a mini long, but using options. Okay. It's purely directional. And I've put the risk on the trade almost at 4 grand there. Okay. So we're just straight out buying a September expiry option at the money. Okay. Slightly in the money. And don't worry about that terminology if you don't understand it. Okay, so now though, have a look at the difference in the reward side, guys. Okay, so if it comes back down near that support level, on the mini warrant, I was making around $600, $600. Now, if it happens quickly, I'm making around $1,300 to $1,000. Okay, and what you can see via the option, and I'll put this on 3-day. Was it 7-day increments?
7-day increments for the warrant. Yeah.
Okay, so if I match the increments, you can see time decay on the option is hurting me a lot more than the mini warrant.
Yep.
So let's pro and con this for a second. Pro, if it moves down quickly, I make a very quick, swift, healthy profit. So it's a bit more leverage than the mini warrant. But this has to be a shorter term trade. I want to be in and out within a week or two, because if I'm not, then the time decay is really going to destroy the trade.
Yep, absolutely. Now, we did look at a scenario where it fell 30% with the mini warrant. Because this is, a more aggressive strategy, if you do get that very, very large movement, that isn't even 30%. The bottom there is a 20% move.
Yeah.
And if you get a 20% move at any point within the next sort of 7 weeks, I think it is, you can do extremely well out of the option. So, like you said, there's pros and cons to each strategy. There's no golden strategy. It's more about using your methodology to find the right tool for the right time, and doing it with a consistent approach.
Yeah. So those two strategies I've just showed you are going to be really good in a certain market. Like if I go back to the XJO, for instance, on that COVID recovery, okay, where we had that really strong uptrend through here, they're the periods that you want to be using that style of trading.
Yep.
Okay, extremely leveraged, extremely directional, but you'd only use it in a market that has a strong trend. Okay, you don't want to be using it in a market that's floundering around like this. Okay, so timing is very, very important, and condition of what the market's doing is very important in strategy selection. All right, so that's a straight put option. The next sort of thing, the next one along is a bear put, right? Once again, don't get hung up on the strategy or the name of the strategy. Just have a look at the payoff matrix down here, and I'll set it to it's the same risk trade, $4,000, but now have a look at what happens with time decay. Okay, so we've got a directional trade. If it gets down to support, the profitability is similar, but have a look at what time's doing. The time is enhancing my profit on a downward movement. It's enhancing the profit even if the stock goes sideways, but then time works against me if the stock moves up. Okay, so this strategy, so you do a put option if you think the market's going to fall sharply and you're very confident in that. If you still think it's going to fall but it's going to flounder around for a while, then you can adopt a strategy like this.
Absolutely. So, yeah, this shows you that using the options, it does give you that flexibility to sort of construct a payoff that suits your expectations. And we use technical analysis and we use our rules to generate those expectations.
Correct. So, Graham, you've just asked a question with your ETO versus mini example. Are you applying the same outlay? Correct. Yes. So, every single one of these trades, I've applied roughly a $4,000 risk.
Yep.
Okay.
And with each of the trades that we're looking at here, that $4,000 would be the absolute worst case scenario maximum you could lose.
Yeah, that's if you close your eyes, don't obey your stops, let
Yep.
it run to expiry.
Yeah, and even with the mini warrants, it's very, very, very unlikely because it's got an inbuilt stop loss.
Correct. So it's all about managing risk, guys, and capping that risk somewhere. All right, so that's a bear put. So we've gone from showing you a condor where the market just needs to stay between a support and resistance level. It's purely a time decay trade. You're making money from time, and you want to hold it through to expiry. Here, and then we moved on to a mini warrant and straight put, which is purely directional. Here is a bit more directional, but with a bit of sideways protection. Okay. And then the last strategy I'm going to show you is a bear call, and it's structured in a way, once again, where we're just making money purely out of time decay. So this is similar to the short iron condor, but it's only the top section of that trade. So the reason why I would do this type of strategy over going purely directional is perhaps we feel that this resistance is going to hold, but we're not confident it's going to fall quickly. But I'm very confident about that resistance.
Yep, absolutely. So, this would be a much more sideways strategy than the bear put we just looked at, which was a more directional strategy. This is still, a slightly bearish directional strategy, but sideways movement is fine for us. So, really covering off two of the share price directions.
Yep.
We need it to go sideways or we need it to go down. We only don't want it to go up. And even then, a little upwards movement would be okay for us.
Yep, absolutely. All right, so showing the payoff. So the profit's now capped even more again than the other two strategies. So we can't make any more than $1,000 on this trade. So as soon as you start wanting to go and have this pure sideways strategy, the profitability gets capped off quite a bit.
Yep.
Where if you go directional, straight put has no profitability cap. Other than if the stock goes to zero.
Yep.
A bear put has a little bit of a cap on profitability, and then when you start going into these sideways strategies, it's really capped. But the benefit of this trade is have a look, right? Basically, with this, I've had to go out to August 18th to get the credit at the levels I was comfortable with. So I want to get above that resistance level. Okay. So basically, I've got to get out to the 18th of August to make this full $1,000. Now you can see here I can get out early if the share price falls, and that's what Sam was saying before. It's got a slight directional sort of slant to it as well. But what I love about these strategies is that you can see that even upward movement with time decay, I can make some profit. So I've got a little bit of luxury of upward movement. It can come and play with that resistance level as much as it wants. As long as it doesn't break through that resistance too far, I'll be okay as long as I can make it through to August.
Absolutely. So if you recall, $7.07, that was the resistance. That's where we'll look to close. Even if it breaks resistance, if enough time has occurred, we can still take a profit on the trade. In fact, by expiry, we need, I think, about 6% upwards movement to start losing on the trade.
Yeah, that's 2%. So you're right. Yeah.
So really, we're covering off, two of the three directions, sideways and bearish, and then even a little bit of the upside as well. But like you were saying, the trade-off for that is we're giving away some of the potential profitability. We're capping our profitability. And similar to the other strategies, this is a $4,000 risk, trade.
Yeah, correct. Now, this all might sound a bit complicated, guys, and we've shown you different strategies for different market conditions. And as a complete newbie trader, never looking at options or derivatives before, this will be overwhelming.
Oh,
right?
absolutely.
If you're not feeling overwhelmed by now, then he must be a
I don't know what to
genius,
say
you know
to
what
you.
I mean? Like, I don't know what to say, right? So you should be feeling overwhelmed. But all I'm trying to demonstrate through this webcast is what you can possibly learn and what's out there. Because not many people talk about this because it is fairly complicated. Now, we've been educating people on this for 15 years. No, sorry, 17 years now. What am I saying? So we're coming into 18 years almost of educating people in Trader Circle on these exact strategies. We've created what we call our strategy cookbook that shows you not only how to build these strategies, but when.
Yep.
We have rules on the market based on technical analysis on when to go into the different strategy styles. Okay, so basically what we do is we run a 4-month course, okay, where there's 2 live weekends. The first weekend, you learn all your technical analysis. You learn your rules on when to get in, when to get out. And then we teach you mini warrants, okay? Mini warrants are a good beginner's tool, okay? And some people decide just to stop there and trade mini warrants. But they're fantastic to trade bullish or bearish. They don't really give you this sideways flexibility that options give you. So people go away after the first weekend. They'll go practice, learn the rules, call the trainers up, check that their technical analysis is correct, all that sort of stuff. And then they, come back and do options and repeat the same process again, go away, practice the option strategies, call their advisor, call the trainers, ask questions, and cement the whole process. So everything we've shown you over the 2 sort of sessions here is exactly how we, what we're teaching in our courses.
Yep, absolutely. It's what we're teaching. Obviously, it's a lot to grasp, but it's a 4-month approach, and we take it bit by bit. And there's lots of paper trading. There's lots of practicing. And practice is the best way to grasp this sort of thing. Practice, practice, practice. And the great thing about paper trading is even if you get it wrong, it's not going to hurt your hip pocket.
Absolutely. So look, I'm going to probably spend the next sort of 10 minutes talking about our courses in a little bit more detail. So basically our approach to all of this, guys, and what Trader Circle is an education company. Where we provide trading services and broking, but that's secondary to what Trader Circle really is. Now, in the beginning, Trader Circle actually didn't even have broking services at all. Okay, for the first sort of 4 years, it was more education than anything, and really the broking side of it was born out of necessity and out of requests from our clients, because they're going across and doing our recommendations through 3 or 4 different brokers, and the brokers were competing with each other on price, and they were moving the options market. And people, by the time they were finished getting in, were paying 20, 30% more for trades that they shouldn't have been. So we decided to bring it in-house and say, look, if you're going to do our recommendations, you've got to do your broking through us. That way we can better protect the price of the trade we're trying to get in. We can't have all these different brokers jumping over each other, getting into the trade, because then we're moving the market. All right. So basically, So what we do is we have a structured approach. We have a set of rules that we teach you through the courses. It's practical, okay? So it's not a university degree, guys, okay?
I went and studied a lot of this stuff at university, and a lot of what we were taught very irrelevant for actually trading the market.
Correct. Correct. So it's very, very practical. We're only going to teach you what you need to know to trade. Okay, you're not going to learn all this extra fluff. So if you go to uni, you're going to lose 4 years of your life with us,
and a whole bunch of money,
and a whole bunch of money. With us, you know, it's a 4-month course. It's going to take you at least sort of 5 months, maybe, to really, you know, get your head around things, depending on how quickly you grasp it. But you know, the support's never ending. You know, we're a support company. Even after the course is finished, you've got access to the trainers and the advisors. So it's all about support and mentorship. And, you know, that's what we're really about, guys. Like we understand what it takes to learn this stuff. And I came in as a client originally before I started working here, and knew nothing about markets either, right? That was 10 years ago now. And now I'm sitting here educating it myself, right? So the courses work, guys. We know how to teach people this complex thing of trading and derivatives, right? That's what we're actually really, really good at. And I honestly believe nobody leaves our courses not understanding this. Okay. So what you'll learn, all right, as we showed you in the first webcast, picking direction with technical analysis. Okay, so we'll just teach you the foundations of technical analysis. It's not an advanced technical analysis, guys. We keep it simple compared to what's out there. We find simple is better, and that if you learn too much in this space, it can be restrictive.
Absolutely. And I do want to touch on that. I think a lot of the power of technical analysis is from other people seeing it, it's from the market seeing it. And the more complex, the less utilized it is, I feel, the less effective it is.
Absolutely agree with that. All right, so we use technical analysis for 95% of the decision making, getting in and out of the market. So we start there. From there, we'll teach you various trading strategies. So you'll start with mini warrants. You go away, practice mini warrants, do some paper trading with the group. You know, we pin everybody against each other. That's in the group, okay? And you know, whoever wins at the end of the 6-week period, I think at least gets $1,000 worth of brokerage or something like that.
So you prove yourself the best of the course you're in. There's a huge benefit to it.
Correct. So you're going to learn trading rules. It's perfect for beginners and it's perfect for experts that have been trading a long time but want more of a disciplined approach. So what's involved, okay, overall is we have 2 weekends that we run that are face-to-face workshops. You can do that in our boardroom, exactly where I'm sitting now. You can't see me on the camera anymore, but basically exactly where we're sitting now. It's a small group of people. We don't invite a lot of people along, guys. We're not doing rooms of 30 people where you're going to get lost. You know, most courses we cap them out around 10 to sort of 11 people. You know, generally you have maybe 8 people in the boardroom and then a few people that are doing live stream.
Yep.
So
we've done the big courses in the past, and it's, I think, harder for the attendees to pick up the educational content. If there's fewer people, it's more personal, and you know, the educator can be more direct and help you overcome those sort of knowledge barriers that you're facing.
Yeah, that's it. So the live stream, basically how that works is you'll be sitting on a webcast similar to what you're doing right now. You'll see Carlo's screen. There'll be camera shining on the room so you can see everybody in the room and Carlo presenting the course, and you can interact through the chat box. And also you can raise your hand and turn your microphone on and ask questions and things like that. So you're part of the room, guys, even if you're live streaming. So if you're from interstate and you don't want to travel down, or you're worried about COVID and things like that, you've got the live streaming option as well. So you get 4 months of ongoing online training. So you basically come in and do 1 face-to-face weekend. You get 2 months of training after that, roughly, okay, depending on the dates. And then you come in and do another face-to-face weekend and have another 2 months after that. And that's fully inclusive of software, you know, access to trainers, access to recommendations. You get everything included in the course. There's nothing else you have to purchase for those 4 months. As we mentioned before, there's paper trading competitions and things like that. You get access to your own personal trainer. So that could be Caro. You met him last time. You might catch me or Sam every now and again. You got Ben as well, and Jack, all on the desk here waiting to take your calls and help you out, whatever questions you've got, or help with strategies and picking direction.
Absolutely. And I do sort of want to reiterate on that point. Like, the only support is what you don't ask, that you don't get is what you don't ask for. So, if you need something, if you have any questions, if there's something you don't get, call up and ask. The most successful people we have are the ones who speak to us the most, are the ones who call up and utilize the service as much as possible.
Absolutely.
Yeah.
Absolutely. There's one guy at the moment I'm spending about 40 minutes a day talking to, and he's right into it. Like he's he's probably spending a good 2-3 hours a day trading. But yeah, that's what we're about, guys. That's what Trader Circle is. Okay, so this is sort of a bit of a structure here. If you sign up, you get access to our pre-learning. A lot of the pre-learning will just give you some market basics. It will show you, what derivatives are. We'll explain options in a little bit more detail. It just helps prep you for what's to come. Okay, it's not mandatory, right? You'll show up to the weekend, and Carlo will cover back over all of those things in the pre-learning anyway. But if you're an absolute novice, we really suggest that people do that pre-learning, because it will help you through the rest of the course. Okay, so there's a pre-learning component there if you choose to do it. But then through the core of the first weekend, you're learning picking directions, basic strategies, risk management, and the trading rules. Then you go away for about 8 weeks, okay, give or take a little bit. Could be 6 weeks sometimes. And you've got videos to watch that recaps over that course weekend. You'll have a webinar to go to every week with Ben, which will teach you through the mini warrants and the picking direction rules and things like that again. Okay, so we cover it, and we cover it again. Okay, so that way it just really builds in by the end of those 8 weeks. You'll have your paper trading competition. That way you can practice what you've learnt, and you'll have your mentor there. And once again, you get access to all the calculators and everything you need included in the cost of the course. Then you come back again, okay, for another face-to-face or live stream where you're going to learn the option strategies. So that short iron Condor strategy, the bear call, the puts, the bear put. You'll learn all those types of strategies. You'll get the cookbook that will help teach you when to use those strategies, the best timing, and what we're looking for on the chart. And then you go away again for another 8 weeks, and you cement all that in. Okay, so you ask a million questions. You get onto live daily webinars. We do a webinar every day. Okay, yep. I'm on Tuesdays. Sam does Thursdays. You got Caro Wednesdays. You got Ben on Fridays, and Jimmy on Mondays. Okay, so there's a webcast every day. You can come along and learn a bit more about options and what's going on.
Absolutely, and those webcasts are great for finding trades. Yep. What we do in those webcasts is apply the rules, apply the structure, and we look for trades. And if you're going through the course and just starting out, it could be great trades to put into the paper trading.
Yep, absolutely. So what you're seeing here, guys, is, we're taking something very, very complex. We're dividing it across roughly 4 months. Okay. We're teaching you. We're then showing you again. We're giving you videos so you can watch it 10 times over. Then we're showing you on live webinars, and we're just continually cementing those concepts down. And like I said, there's nobody that comes out of this not understanding how to apply the rules and how to apply those strategies and use the risk management concepts that we teach. So nobody, everybody comes out understanding it. So your teacher's actually Carlo Castellano. He was one of the founders of Trader Circle. He's gone into a bit of a semi-retirement phase where all he really does now is does the education side of it and puts out some recommendations. Okay, so it doesn't work full-time in the business anymore. He just comes in and does the education side of it. So he does all the face-to-face element. And then us here, the advisors and trainers, are here to support you along the way. He's got over 25 years of teaching and trading experience.
Absolutely.
He honestly is an excellent teacher, guys. He somehow, I don't know how he does it, guys, but he takes something so complex like options trading and simplifies it down to a point where everybody comes out of that course understanding how to trade options.
Yep. Yeah, he's got a natural talent for teaching. Absolutely.
Yeah. So
He's also his partner's a teacher as well.
yeah,
So.
she is actually. Yeah, she's I think primary school teacher, isn't she?
Yeah, yeah,
Yeah.
yeah.
So yeah, he'll be your main educator face to face, and then you'll have our team here, Caro, that you met last week. Me, Sam, and Ben and Jack all helping you as well
Mhm.
along the way. So you'll learn his exact trading rules he's been using for years. He still uses now. So they've been obviously proven and used for a very, very long period of time. Yeah. So I'm just going to flick through this. I think we've covered that to death now. We've covered all this. So I think we've doubled up just a little bit too much on the slides here. Okay, so basically the course costs and how this all works, we've mentioned multiple times now, 2 weekend workshops. Okay, so it's 4 days split across 2 weekends. All right, of face-to-face learning or live stream. Okay, included in this course, you get 4 months of online training, 4 months of a personal mentor. You'll have 4 months of recommendations and access to the trading platforms, the calculators, our website, everything that you're possibly going to need to be trading. So there's no other costs involved other than the cost of the course itself. So it's all inclusive of 3,490. Now, obviously, we'll start with a deposit, and then we can also talk about payment plans and things like that as well. But the overall cost for the course is 3,490, which is actually very, very good for a 4 months course, guys. If you're doing a Kaplan course or something like that, one module will be about $5,000. So and you're looking at sort of 8 to 12 modules, depending on how far you want to go down the university path. So, if you go down that university path, you're looking upwards of 20 grand plus.
Absolutely.
And
like I said before, I've been to university and I've studied this sort of thing. And if you're serious about being a trader, what they'll teach you there is not always that applicable.
no, it's very much going to be more if you want to work in the industry. Whereas if you just want to become a trader, this is a much better, more practical way and approach to going about it. Okay, so look, this is to do the full course, guys. You can also look at just doing the first element or the second element of the course, depending on your existing experience levels, okay, and what you want to achieve. You just want to come in and learn how to pick direction and trade mini warrants, you can just come in and do that first section of the course. And look, I'm not going to go through all that type of pricing here. If you want to learn more about that, just simply type in book into the chat box, and one of us will give you a call, or just give us a call here at Trader Circle, and anyone can answer those questions. So just before we finish things off, if you don't want education, if you already know a bit about trading and you just want some help, if you want trade ideas or recommendations, if you want someone to help you with execution, or if you just want to talk shop, talk market, we do have full service advice. Okay, so full service is basically you pay our full service brokerage rate, but you get access to any of the advisors on the desk, develop a relationship. And we can help you with your direction picking, your strategy choice, and things like that. And in fact, that's what most of my day job is at the moment. Okay, between market hours, I've got a group of traders that call me religiously, say, look, I've got this view of a stock, what do you think? And then they'll show me a strategy, and I'll help them refine that strategy and make sure that they're following the rules properly and staying consistent. So if you're just looking for a relationship like that, just call in on the desk. We'll have a chat. So if there's any other questions, guys, please shoot them in now. Otherwise, it's 2:00 and we'll get ourselves back on the trading desk.
Yeah, absolutely. So like Tim said earlier, no stupid questions. So if you're thinking about sending the question through, definitely do. Happy to answer it.
We'll just give you a few minutes there, guys, if you want to put some questions in. But yeah, so there's a lot to learn out there, guys, in the way of trading. If you're just starting out, please reach out, guys, right? We've all been there before. Everybody on this trading desk has been a newbie trader at some point in their career. We've got a lot of experience that we can sort of pass on. And you'll find that, getting involved with us is going to help you fast track your results in trading. You got to see it as running a business. If you go out of business alone, you're going to have much more chance of failing. But if you get some advice, you get a consultant involved, you talk to some other people that are more experienced in running a similar business, you're going to find success a lot quicker.
Absolutely.
It looks like we've got a pretty quiet crowd today. So no more questions. So I think we might sign it off there. So thank you very much for listening in.
Yep.
And once again, if you need anything, you've got questions about our courses, you've got questions about trading and trading services, please give us a call.
Absolutely. I hope you guys enjoyed.
Take care and bye for now.
Bye for now.